So we mentioned that life insurance, for the most part, is tax-free when you get the benefit. But there's some situations where it's not.
That is
So
correct.
so maybe we can highlight just a few of those for just a moment, just to let people know that it can happen in some cases.
The biggest place where I've seen a problem with a death benefit becoming income taxable is surrounding what is called a transfer for value rule. And where I have seen it come into play is in a corporate situation. Mm-hmm. And when you have a life insurance policy that is corporate owned, you cannot transfer that policy to an officer or shareholder of the company. Or a shareholder, I should back up. You cannot transfer that to a shareholder. If you do that, it becomes subject to transfer for value, which means if the insured dies, that proceed could be income taxable.
So this is like the situation where if you're trying to convert from the corporate-owned policy to like a cross-purchase type plan.
That is correct.
So
that's
correct.
You're
transferring it to somebody other than the insured.
That is correct.
And in that case, since they're paying a value for the policy, that's considered to be like an investment.
Correct.
And then when it's paid off, it's a return on the investment, which is taxable.
That is correct.
Okay.
Now, a shareholder can own a policy from inception. Mm-hmm. So if you know that you're going to do a cross-purchase up front, then there's no problem with that.
Yeah.
That's an easy way around it. Otherwise, you have to work pretty hard to get life insurance to be income taxable. I mean, I could conceive of the fact that you might have a third-party owner and a personal beneficiary that could possibly trigger a transfer for value.
Yeah.
But normally, it's very clean.
Yeah. Now, there's a couple of things, I guess I'll just sort of bring up one of them because I'm sort of the tax person here.
Yes, you are.
And that is, when a regular corporation, what we call a C corporation, not an S corporation.
Correct.
When that type of a corporation owns a life insurance policy and it's paid off, then there's a special way of figuring the tax. We call it the alternative minimum tax.
Correct.
And part of that computation is something called adjusted current earnings. Anyway, what it boils down to is that for figuring that tax, you do pick up the life insurance benefit.
That is correct, you do.
And so it can be generated an alternative minimum tax.
That's correct.
There is another thing that's been happening recently, and that is the situation where people are borrowing. You were talking about using the policy for something other than the death benefit. So when they're borrowing it out and suddenly the value goes down, and if they let the policy lapse, now they have a situation where they actually have taxable income.
That can be a very
unhappy situation.
Unhappy situation. And I have worked with some contracts that were at risk of that happening and decided to go ahead and surrender contracts while there was still some surrender value in the contract to help buffer the tax consequence. Mm-hmm. But it is not a pleasant experience when an owner of a policy gets a letter in the mail from the life insurance company saying you will be getting a 1099 for this amount of money because your policy has lapsed.
Right.
And that is that can be easily prevented if the policy is being monitored.
Yeah. Well,
and appropriate planning is taking place.
We should mention this. This is a big problem right now because there are so many people that are, particularly seniors, they borrowed out their policies and they're having trouble making premiums.
Correct.
And so forth now. And so when you have that situation, you should at least get some tax advice and have a hard look. And the life insurance companies actually have their own tax departments that can help in this process.
Well, the life insurance companies, what they will do is they'll tell you what your cost basis is in the policy, or my experience of what they will do is they'll tell you what the cost basis is in the policy, what your current surrender value is, and the premiums, and the premiums that you've paid, which is your cost basis. And at that point, they pretty much leave that calculation up to you, or they'll tell you you need to go talk to a tax advisor.
Yeah.
But you're correct that there are a lot of whole life policies in particular is where this severe loan issue comes up because a lot of premiums have gone on automatic premium loan.
Right.
And
so the they're borrowing to make the premium payments.
That is correct.
And suddenly there's no enough cash value to support that.
Correct.
Yeah. Okay. Are all life insurance companies the same?
No. This is something, especially after this last downturn that we went through, it's critical to be looking at the rating services. As the insurance professional, I need to be looking at AM Best, Moody's, Standard & Poor's, and a number of different other rating services to be sure that the insurance company is still performing well. You know, AIG went through their meltdown. Now the government came in.
That was a big one.
That was a big one. The government did step in to help with that, with the lack of better terminology, bailout.
Yeah.
And actually, I guess that has worked out to the government's benefit because they're getting some revenue off of that from AIG. But definitely, you need to do your due diligence on your insurance companies.
Yeah.
Now, you know, you can get into a situation where policies have been in a place for a long time, and what do? You have uninsurable people, and the company is no longer strong financially.
Mm-hmm.
You know, then you start to look at, do you want to keep the contract, revisit the original goal of the contract? Is it accomplishing what you originally set out to accomplish?
Mm-hmm.
And if not, possibly not have it anymore.
Boy, that would be a tough one.
It's not an easy choice to make, but it's something, again, it's a planning process to keep going back and reviewing the old insurance contracts.
Because that is one thing that people don't, because we're all immortal, right? We're going to live forever. And we're always going to be able to qualify to get coverage
Yes.
For life insurance.
And it comes as a shock when you're not, yes.
So anyway, so that is something to think about. I mean, that you can have changes in health and so forth. And so you may not have the opportunity tomorrow that you have today for getting a coverage.
That is a very good comment, and when I'm working in particular with young families, the tendency is to think that, well, I'm not going to die anytime soon. Mm-hmm. And sadly, I have examples of a number of families where someone did die real soon.
It's just an auto accident, some freak thing that can happen.
Yeah, and procrastinating on it, don't do that to your family.
Yeah. Okay. Now, life insurance agents quite often will go out and they'll make presentations and so forth, and they'll put together an illustration showing, okay, here's the premium, here's the inside cash value buildup, you know, and you got this fabulous return of 11% that you're going to get. So how reliable are these illustrations? Actually,
there's been a lot of reform in that area, and I am glad to see that. The companies that I am currently working with, we cannot illustrate over what they're currently paying, and I'm an advocate of that we can't show, gee, what happens if a contract earns 8%. Again, I do not do any variable life insurance. I only do traditional, so I do not work with the variable marketplace. But I also have the insurance company prepare the illustration for me. The software changes daily, weekly, monthly, whatever the case may be, and I want it directly from the insurance company. I feel more comfortable with that they're the experts at using their own illustration software, and I give my parameters as to what I am wanting to show to my client and have them put it together for me.
Okay. So Peggy, we probably have about 4 minutes left just to let you know what's going on, and you know, now it's going to feel maybe a little more crunchy. But,
okay, all right.
But what I do want to be sure that we cover is what are the different types of life insurance policies, and when do you think that they're most appropriate?
Well, there's term insurance, which can be very appropriate for the young family that has limited finances. It also can be very appropriate for the small business that doesn't have much money to pay for adequate insurance on the owner or other key employees. As time goes on, it could be more prudent to look at a whole life contract, which is the contract that in most instances will have the best guarantees, or a universal life contract that has guarantees built into it. Whole life and universal life have cash value buildup. They can have a savings component to them dependent upon the design. There's so many different ways to design the insurance today. my best advice would be talk with a professional, somebody that you trust, to go over what kind of contract would be best for you. The other contract that's out there is a variable universal life or variable whole life, which is directly tied into the equity marketplace. Because I'm a fee-only advisor, I am no longer authorized to sell variable life insurance. It's commissionable and I cannot take a fee for a security, but it is an option out there where the individual, the policy owner, can actually invest those cash value dollars in the equity marketplace.
Okay, so here's a question. I don't know if you've heard this before or not, but have you ever had a beneficiary ask how much premium was paid for a policy, or if the policy was rated?
Actually, I have not. I have explained that to clients, to beneficiaries, so they understand how the wealth was distributed and how the contract was issued and the benefit that they're getting because the life insurance was in place.
Yeah. So do you have a final word of wisdom maybe related to this area of life insurance?
If you have a family that you care about, a business that you care about, employees that you care about, or a charitable concern, cause, issue, look into life insurance. It can be a great way to have your legacy continue.
That's great. Peggy, thanks for being my guest.
Thank you.
It's always a pleasure having you here with me. Folks, I hope we've given you something good to think about, and I know that we have, but I hope you'll think about it seriously. And we'll see you next time on Financial Insider Weekly.